The reason we know how to use margin because we know how to use margin. Because you don't know how to use margin, well, don't put it on us. Don't even ask us question.
Hey Ryan, why don't you pull up Amazon's margins real quick?
Well, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when you said that.
Wow, physical philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It's Saturday, and it's Saturday, 8 p.m. Eastern. And at Saturday, 8 p.m. Eastern, you could be doing a wide variety of activities that may or may not be accretive to your own lifestyle.
It's true.
Now, Fiscal, what are some of the activities you could categorize into the non-accretive category?
I mean, you could be making Big Trouble in Little China, for those of you who remember. Remember that movie? Kurt Russell, quite a star. You could be, perhaps doing some fearing and some loathing in Las Vegas, for those of you that are familiar with that. Especially what you do in Las Vegas. Now, it might stay in Vegas, but the effects on your lifestyle and your cash flow may persist beyond Vegas. Just saying.
Yeah, you could. I mean, I think if you're in Vegas this weekend, it could be acceptable because WrestleMania is going on right now. Shout out TKO stock. I would consider that a pretty accretive activity you could be doing. But perhaps after WrestleMania, you could definitely be doing some detrimental things to your lifestyle.
Some beers with Stone Cold Steve Austin.
Some nose beers potentially after late at night.
Interesting.
Things you don't want to partake in. You
Absolutely.
Could be going down the underground tunnels of Las Vegas looking for, some ran down women of the night. Just stuff you don't want to be doing.
Yeah, city girl party lifestyle,
Inappropriate behaviors, for those who know. But welcome back, everybody. We have a classic tonight. It's the good old portfolio update, as per usual. It's going to look a little different than last time because we had a bit of a, market's been in a bit of a, I don't even know what to call it, last, I don't know, month and a half. It's been a roller coaster, you could say, for sure.
Yep. Sure has.
But what even makes me on an emotional roller coaster sometimes when somebody becomes a new channel member, which gets me to the first point of the video or the live tonight. Once again, best way to support us here on the show, monetary support, of course, that's number one, but also smash the like button. It's free and it helps us out a lot. But Mike, I'm gonna mispronounce this, Nieswander, or Michigan Prepper 517 has become a Cash Flow Kings channel member. Fiscal, do you know who Mike is?
I actually don't. I was surprised to see that before we even started, before we really even went live.
Yeah, so as per usual, thank you very much. And you will get our 15-second mandatory dance for any monetary support of the Cash Flow Kings to not become cash flow negative. Thank you very much, Mike, for the donation. We appreciate it. We appreciate it greatly. Enjoy your value as the Cash Flow Kings channel member. The best $2 a month you could possibly spend out of your bank account, if you ask me.
Yeah, personally. I mean, I've heard that from many people. People are saying this. They're saying, please, you're going to say it's too much. You in fact, keep some of the value. It's just too much value.
Please, it's too much value. And we're going to say, nope. We need to get like an AI deep fake of Trump.
Are we going to do? Are we going to do what everyone else does and say this $2 level isn't going to last forever and lock it in now because its price is going up later?
We could do something like the Dirty 30, and like we get the first 30 people that get it for $2 forever. No, we could say that and gouge you guys for more money, but and we also have to start this live with unfortunate news. The Roger Grover interview, which was scheduled for next weekend. And this week for Cash Flow Kings channel members, unfortunately, is postponed. Big word, postponed. I don't want to say anything since it's a small cap, but we do know why Raj couldn't make it. They gave us a reason, and I won't say anything. So Cash Flow Kings channel members only there. Seymour Duck in the chat. He was on last week. It was a fun episode. Go check it out if you guys haven't already. But before we get to the bread and butter of the show, QC Panic Seller says, if you guys could only buy one of the Mag 7 stocks, why would it be Amazon? He read our mind pretty much.
Well, he asked if it would be Amazon. He didn't say why would it be Amazon, just would it be Amazon.
I think that's the pretty clear option. Amazon and Google are the big two.
But yeah, I think like if we were gonna say just irrespective of like might one of them be a better deal today based on like how the price has recently moved, because arguably you could say recently with when Google was like 148 or whatever it was, maybe it's a slightly better deal than Amazon at that price. But yeah, if I only had to ever have one and hold it for 10 years or something, probably Amazon. I think that's the one I'm most confident in for the very, very long run. Yeah.
Yeah, I've been allocating. I'm very happy with the allocation. Like we're at around like 10%. So like,
but yeah, I mean, I think Google's an okay choice still. Like, I don't think that's a wrong answer.
What's the highest you'd ever go with Amazon allocation? Assuming there'd be like a dip or something.
25-30%. Like I
very confident.
I don't think there's anything wrong with having it that high. The only reason it's not that high is I think just because there's other stuff that's maybe better value that has a higher chance of 2 or 3xing in a shorter amount of time because of like High Tide, for example, which we alluded to earlier. It's a small cap and it has a lot more low hanging, easy growth ahead of it than Amazon, which is already so huge. So
there's also like other trade-offs too for those who are just just thinking of putting the entire portfolio into High Tide. Like there's, Canadian risk. There's lots of risk when it comes to like general like small caps. There's buyout risk. There's like tons of stuff that you can't really account in for with Amazon.
Yeah, I do absolutely think you could do a whole lot worse than Amazon.
Yeah. That will be a spoiler. It's one of the bigger holdings in the portfolio now. 7 months. I was a Cashflow Kings channel member. That's like,
wow,
you could have a baby in 7 months, basically. That's like the amount of value that over that time, I'm sure it's limitless. We Tire asked a very good question. Are you guys going to smoke with Raj on the show? I haven't smoked in my life, and I'm not like bullshitting or anything.
Believe it or not, yeah, I haven't either. Now, if Mr. Grover himself asks me to, I mean, that would be like going on Rogan and not having elk meat with him. Like you gotta when in Rome. I
don't like the smell of weed. That's the thing. Like I
actually don't really either. In Arizona, recreational is very legal.
Yeah,
I would just be like walking
down get up to it over there.
I'll walk down the street through a neighborhood, right? And like I'll pass a house where clearly they are, smoking and toking on a regular, and I can smell it. Like it's
the worst is like when you're driving and like somebody drives by and you could smell it, and it's just like it lingers there for a good 30 or 40 seconds. Like how reliant are you that you produce that kind of an odor for everybody else to assimilate?
There's like a facility or something that like processes it for something for dispensaries here. And I pass by that general area on the highway sometimes and it smells like literally. Have you ever smelled what it smells like run over a skunk or to like pass by on the road where somebody else has run over a skunk?
Yeah. Like
it smells just like that. It's crazy.
Yeah. That's not the most pleasing smell. You go to any city and you'll smell it too. So it's like,
yeah.
I do prefer the smell of marijuana or cigs, BTI or High Tide. Basically, that's the question I'm asking here.
So it's weird for me with cigarettes because all like when I was a kid, everybody in my family, like my grandparents, aunts, uncles, all that, smoked cigarettes, and the time I would see them was usually around holidays like Christmas, etc.
Oh, so you assimilate okay.
So there's like a thing in my primitive brain that associates cigarette smoke with like the love of my grandparents and like opening Christmas presents. So that's like a nostalgia that career. Now I don't like if I'm in the room with it for a long time, it like irritates me. It's because I don't smoke and I'm not around it much. But like my eyes will water and stuff. But that little whiff of cigarette smoke that I sometimes get mostly brings up positive feelings for me. I know that's really like kind of weird and bizarre.
That makes sense. I don't know. If you're in the red on high tide right now, if you smell weed anywhere, you get reminded of your losses at the moment. Actually, it's been doing really well, so maybe I don't know, you're flat.
There's been a bit of a recovery. I think a lot of the sell-off this is just theory, my opinion. I don't know this for a fact, but maybe Sundial like dumped their shares.
Or maybe they bought more.
Because remember when we were talking with Blake, he thought that they exceeded 5% on accident because the price changed really rapidly.
Yeah.
So
if they dump their shares, I'm getting worried that like our interview has an effect, or like our announcement or whatever has an effect on the price at some point. Like it's getting a little too coincidental for my liking. After this interview, we'll see. But don't be surprised, guys, if we're going to be up in those Cashflow Kings channel memberships to $4 a month because the SEC is investigating us and we have to pay our legal dues. We're doomed enough cash flow wise as it is already. So prepare for it.
I think high tide's big enough to where a show our size doesn't materially impact the price.
Maybe I'm getting, because I feel like every time we've had a high tide show, it's just gone up after like for no reason, like 30%. Hope.
What that says is we got to buy as much as we can and do more high tide episodes.
Yeah, probably.
See if we can hack the system.
We can pull an oracle.
Listen, if the president can get away with doing a meme coin, we can.
Yeah, I think we can
pump a stock that we own and believe in.
Yeah, high tide's the closest thing we can actually get to pumping, I think. Besides dividend, dude. With the Google whale.
Yeah, the Google. Hey, yeah, you're making me think of a certain picture.
All right. So as requested, do you have a screenshot of your portfolio that I can pull up? Are you just going to read it off?
I mean, I can send you something.
All right, we'll filibuster while you work on that.
Yeah. Do a Cory Booker and start talking about justice or right or wrong.
The 25-hour speech.
Yeah, that guy sounds like Kermit the Frog. Not like I'm not saying anything like for or against him. I'm just saying he sounds like Kermit the Frog. And if you don't hear it, if you pretend that you don't hear it, you just don't have a sense of humor.
I will super chat.
Oh, there's one I can't include on here actually.
Oh, because of
it's because it's very small cap.
Okay, I know what you
very small.
I know what it is.
Yeah,
channel members would know, of course. $2.
I accidentally revealed it on Discord, by the way. So, like, if you're in my Discord or if you're a channel member, you might know what it is. But
you get access.
I am slightly concerned about accidentally pumping this one because I actually want to buy more before it goes way up. I want to like double my stake in it. So
Tire made probably the fucking funniest comment on Twitter. Also, he said something about you going after young Latinos of age, of course.
Yeah.
And me being a trust fund baby. I genuinely thought that was the funniest thing ever. Because we all know who the trust fund baby is in the cash flow king community, and it's not me, unfortunately. I would love to not work a day. And
so okay, I just sent you a thing of all my positions and the unrealized gain or loss.
Oh, everybody, this is the type of transparency that you don't get on some live shows.
Yeah, the only thing that's missing is something that's worth around 1%, and it's like a micro cap. So
it's
over the counter micro cap. So it's not very liquid, and so it's not just not something we want to do on that.
Not bullshit.
So let's I guess go down the list now because of recent price movements of MPW being up 30% year to date and Amazon being down like almost that much year to date. Yeah, MPW is ahead of Amazon again.
But would you rather own MPW or Amazon if you had to own one stock for the rest of your life?
I mean, for the rest of my life, probably Amazon, to be honest. But,
so why don't you full point?
But yeah, I mean, by the way, the SPY is down like 10%, and this particular portfolio that you're looking at right now, and this is year to date 2025, so we're talking about how it's holding up in the current conditions. SPY down 10%. This is down about 6.5%. So like
buy the channel memberships. Good Lord.
Marginally better than the SPY overall. Not that is like a huge significant difference, or that I'm a genius stock picker, but I do think that I'll probably slightly edge out the market this year.
$2 channel membership. Yeah. Free money.
Of course, yeah, you've got Amazon. They've taken a beating. We're actually back below my cost basis, believe it or not.
Yeah,
about 179 a share.
C rating from Schwab.
Yeah, Schwab. Buffoonery.
That is buffoonery.
And MPW has an F rating, and therefore I got to get rid of Schwab and go to Robinhood with it all.
True.
Now, I'm not particularly worried about Amazon being slightly in the red right now. It's fine. They're going to be okay ultimately. Do we think that whatever is going on in the world right now is going to lead to Amazon going away? No. Will they continue to grow AWS into the future? I think so. And remember, their e-commerce only accounts for very little of their actual profit. I think that would be the thing that's most impacted by tariffs.
Yeah, because a lot of it comes from China.
But a lot of their higher margin stuff that's like really profitable. And
the cash flows that you're investing in now, basically.
Their web services, their advertising, etc. That stuff is a little bit safer. But in a recession, of course, ad spend goes down, and that hurts anybody that's got an advertising business. So that's something to keep in mind. But long term, yeah, I'm a believer in the Bezos bucks. Now we have BTI, which you can see has really performed well lately.
Yeah.
Plus, it's paying 7 or 8% yield on top of the really solid price performance lately. So I'm really happy with BTI. Honestly, wish I'd gone like 3 times as heavy when it was like $29 or whatever it was. But hey, here we are, right? And I'm not dissatisfied with having this. I'm glad I rotated out of Altria into BTI as well.
Hey, me too.
Though Altria is doing okay too right now.
I just checked Altria's. It's $58 for anybody.
But I do think, like, in the long run, I think I like BTI better. Just generally.
Yeah, it's a pretty clear upgrade, I think.
From
all aspects.
And I think it's still cheaper, like multiple wise, like by a little bit anyway, like of free cash flow. Then of course we have my favorite Southeast Asian company, Grab. Now they've been on a bit of a, it's been a little bit of a roller coaster so far this year, but I'm still holding above my, I think they actually did dip like right around to my cost basis not long ago, but they're back. They had one of those investor day type things, kind of like when PayPal was going to shock the world or whatever. Remember that last year? That was kind of like a meme, PayPal shocking the world, but they had a similar thing. They didn't say they were going to shock the world, and I don't know. But they did one of those, and you heard a little bit about it from like Amit and those guys on Twitter. And I don't think really much happened as a result of it. But I think they'll be pretty good in the long run. And again, Grab is one of those. It's not a US based company. And it's not really impacted all that much by tariffs.
Senator, I'm Singaporean.
Right. And I do legitimately have this idea that some of the price movement in Grab, like when it's gone down on Saturday, I think people thought it was Chinese. I really do think there are some people that thought it was Chinese and sold. I really, really do. That just,
I wonder who.
I'm not saying it's a lot of people, but I swear those people exist somewhere. And of course, next we do have High Tide, which I'm very, very slightly down on it, but we're basically back very close to my original cost basis on that. 5,000 shares though. These are no small cut-ins here.
Do you regret not loading up at like 177? I'm like
feel
halfway in the middle.
I feel like I should have probably, but the problem is when it's been down, a lot of other stuff has been down too, and it's like, what deal do I take?
And you got to
also, you don't want to load the boat because it's like, am I calling the bottom? What if it goes like it can still keep going lower? So a DCA approach, is what I'm a little bit more comfortable with. Of course, Evolution Gaming.
yeah.
Yeah.
OG.
Now that one's really
That's
this last week or so, it's creeped up.
yeah, they reported, right?
Yep. Mm-hmm. They're
I believe I saw dividend and buyback program approved.
that's what I've been hearing. I really need to go back and look more in depth. I think maybe we should talk to Seymour about it because he's probably got all the deets memorized.
I'm pulling up. I do have the guy Finfluential X who we had on the show before to talk about it.
Yeah.
When Seymour Duck, we thought he died. We were worried sick here on the show.
Yeah.
He does have a recap that we can go over later.
Oh, by the way, Disney. I'm a little bit disappointed, honestly, in the recent price performance. But
me too.
I don't know how connected that is to like the actual fundamentals and everything. And
Yeah,
I think, like when I zoom out, I see the fundamentals are still kind of in recovery, but like still going in that direction, that good direction. So I think Disney will be fine. My cost basis is under $100. I think Disney, it's here today. It'll be here tomorrow. It'll be here probably long after I'm even dead. So
Are you
my
allocating
grandchildren
it
can
all,
inherit
or
that Disney stock.
are you allocating? Because I'm kind of like at the question mark.
I'm looking at maybe doing something with Disney, but it's just so tough because these some of these deep red days have put some really good things into or near the buy zone for me. Yeah. And I don't want to like blow all the available capital all at once on one or two things when other stuff might get even more attractive. Generational buying opportunity.
Dividend. I was gonna say do the dividend.
That's a joke for the record. This is just like a correction. It's not a generational buying opportunity. Uber, as they say. I mean, it's hard to beat a cost basis of $61 in Uber. I mean, there are people I know of who got in at like what is now $30 or $40. They're just flossing right now. I'm very jealous.
I wish I would have bought. I keep thinking I bought a lot, but like it's only 5% of the portfolio still.
Yeah,
with gains.
But then again, like this does double expose me to Grab and everything. So yeah, I mean, but still, I do like Uber, and actually, Uber is still not terribly overpriced here. I don't think.
No, I think like 71. I'd be comfortable adding if we were in like a bear or a bull market where stuff wasn't going on 5% dips every day.
Yeah. PayPal, womp, almost back down to my cost. I was close to selling it when it was like 92 or whatever. Stabulo talked me out of it and talked me into buying the next name on the thing. TSSI, which is I'm getting slapped on that price wise, but honestly, not terribly worried about TSSI. I listened to their most recent earnings call, and it sounded like the growth is absolutely still going to be bananas this year. And I think that it's mostly trading in sympathy with NVIDIA, but like exaggeratedly so. So if NVIDIA goes down 3%, TSSI goes down like 10%. Yeah. So it's mostly retail investors that own it from what I understand. So the regards selling and buying back in make the price movement very wonky, but I still like TSSI. They're making pretty good money, and if the projections or whatever the estimates people have for what they could make this year are anywhere close to coming to fruition, I think it's probably going to be worth a lot more a year from now than it is today. So happy with that. Not happy about being down on it, but what are you going to do?
Any holdings in here that you're looking to dump at some point?
Nah.
I like that. I feel like Disney would be an easy one to point at, but like
Yeah.
they're
Yeah.
kind of
I mean,
moving.
like as pissed off as I am about PayPal having been up over 50% on it and then going back down to my cost basis, they're buying back like 6% of their shares a year and
Yeah,
stuff. Like it was so beaten up for so long that obviously the first signs of some weakness in the market and people are just gonna paper hands it away, right? So I think the new CEO Alex Chris, I think he's pretty decent, doing some good things, trying to do some innovation, trying to get some kind of growth out of it. But I think their fast growth days are behind them. I don't think it was ever worth like $200 or $300 a share, and I don't think it's going to get back to those prices. I think we're probably looking at like, if they continue to prove that they can grow and improve and keep buying back, they might get back to like 100 or something at some point. Yeah.
Okay.
What do you got, Ryan?
The value portfolio. Okay, I'll provide an update because there was a discussion last week we had, and I did end up going through with it. I was debating selling out of a very small holding in the portfolio by the name of UNP. Pretty much at like, I don't know, a 6 or 7% gain, underperforming. So I mean, it was pretty much flat, inflation adjusted everything, but market had a good day for railroads, I guess, on Monday, and I got out. And I've been toying with the idea of building up like 4, 5, 6, 7 really core holdings in the portfolio, SHG and SHD included, and maybe just putting 10% of the portfolio in a few companies that are, maybe a little smaller cap, high risk, high reward, as the kids say, but like still very real investment thesis there. And that's what I went through with. And you will be seeing that here. So this is the entire portfolio. This is my entire net worth. Here we go. To start off, Grab Holdings is one of the companies so far that I bought with the money from UNP. Not even 1% of the portfolio. I bought like $300 worth. I'm up a whopping 1%. So if this continues, I'll have 56% returns in a year. So I'm doing very well with that. BTI, once again, it was a kind of a swap play with Altria. It's pretty much obvious choice. Less cigarette exposure, less of the revenue comes from like the. I'm debating making a joke in my head about people in Britain smoking cigarettes, and I'm not going to. You get the gist. Lower payout ratio, buyback potential. Really don't have to overcomplicate it there. It's a better option than Altria. Up 20% on that since I made the swap. So I'm very happy with how that's played out, and I'd love to add some more. But once again, do I want to average up 20% right now? I don't know. Right now, WrestleMania is on TKO. That's another one of the smaller holdings, 2.35% of the portfolio. Up 55% on it. Wish I went heavier, but there was a reason I didn't go heavy, mainly just because there wasn't, at the time that I bought, it's $79 a share. By the course, channel membership $2 a month. At the time I bought, there wasn't a whole lot of data on the financials yet. They weren't like really disclosing if they were free cash flow positive or negative because it was recently a merger company. So not a bit of a gamble play there, but that's one of the holdings where you just look at the business's qualities. I think they have a pretty clear moat around entertainment when it comes to wrestling and the UFC. Very strong brand power, pricing power, you could even say. I do have some concerns, though, long term with how consistent they're going to be with the business. Like John Cena obviously is retiring this year. Same with UFC fighters. I feel that there's been a downgrade in the UFC quality recently, but still, they're making a lot of money somehow, so I'm not complaining. Unfortunately, as one stock flies, another one falls, and that would be other than Disney, of course, which I am down 22% on for the second biggest loser in the portfolio so far. Geez. Yeah, I mean, there's a lot of opportunities today, and Disney, unfortunately, it sucks to see where the price has gone, and sentiment I feel is like right as we were going up, it just got shot back down. So, yeah, been a rough one. But I think if it got to like below 80 again, I'd have to buy. Right now, I'm just kind of holding and being patient. Next, Evolution Gaming, that is 5% of the portfolio right now. We've seen some nice gains on that in the last week, around 5%.
Nice.
I was going to put the other half of the Union Pacific money, so I could have had like 6 or 7% of the portfolio in Evolution right now. But of course, like the day I was gonna buy, it went up like 4%. I'm like, nope, not doing it. So,
Yeah.
but
Plus,
still,
I mean, it is like, since it's OTC, you would have to pay a fee or whatever to trade it. So is it worth buying small chunks of Evolution when you then, like, let's say you buy $100 of it, the fee is like $6.95 or something. So you have to go up like 6% just to
Yeah.
overcome the fee.
I would rather wait till it gets to like 78 again, near my cost basis at
Yeah.
least.
Or
where I
until you can put a larger,
Yeah.
you want to buy in larger swaths for the trades
Yeah.
to be worth it.
Yeah, for sure. And, anything happens, I still have another bank account with some money I could deploy if I wanted. Next, Uba, shout out to Arya. Entire pitch came from him. 5.35% of the portfolio. I'd be happy to slowly add at like $70, aggressively add below 65. I think below 65 is like the clearest buy in the market at the moment. Next we have High Tide. We're about even there, down 7.6%. I didn't realize how allocated I was, but that's quickly ran back up to the top of the portfolio. It was down, then it was up, then it was
Roller coaster.
That's what you got to expect though with small caps. Blake warned
Absolutely.
us, so I'm not even gonna be mad.
We're warned about the volatility.
Yeah. As Blake said, you have to be willing and comfortable to underperform for years, but no, over a long-term period of time, assuming everything goes right, you're looking at some nice returns. Then we have a bit of a question mark in the portfolio. Microsoft up 52%. I bought a majority of my position in the $225 to $250 range in 2022. I think Microsoft's a really solid company, and with that said, it's been a hold for like the last 2 or 3 years in the portfolio. If Amazon were to somehow get below 150, I wouldn't be afraid to start dipping into the Microsoft. Or who knows, SHG maybe keeps falling. It sucks because they're kind of, they trade very similar because it's tech and growth.
Mm-hmm.
So it's like, very rarely is Microsoft going to be up 2% of the day and SHG's down 2%, or it's like an obvious swap.
So
maybe
Microsoft is in SCHG, yeah, along with Amazon, both of them.
Yes.
Yeah. So honestly, you could literally just be like, buy Microsoft, I'll take my gain there, put it into Amazon, and just have one double exposure.
Maybe put half of it in Amazon, put half of it in SHG. But
I mean,
the thing is, there's so many holdings in SHG where I
it's
feel
your
like,
money and you need it now.
Yeah. I love Microsoft. It's and I feel, geez, like you put a weapon to my head and you say, would you rather own Microsoft right now or Amazon for the rest of your life? I think I say Amazon.
And at today's price.
At today's price, I think Amazon.
Yeah.
Then SGov staying at 7.26% of the portfolio. That's just kind of my cash position.
Yeah.
It was around like 10 to 12%, but obviously I deployed some of it. So, not very happy or not upset where that's at right now.
Yeah.
SHG, pretty flat on that. 9.25% of the portfolio. Once again, the plan is like SHD be about 10% of the portfolio, so it's right about where it's at right now. And SHG be about 25 to 30%. So like that outperformance really isn't. And of course, I'm gonna use the dividends in like 5-10 years. The Vegas trip has to pay for itself somehow. Who knows?
You're gonna gamble the dividends.
And look, if I were to ever sell out of SHD, it wouldn't be now. I'd probably wait for a better time. SHD cyclically does better in certain times. Right now, they have a lot of exposure to pharma, I believe, which has not been doing optimal. So you just gotta wait for a valid time to, I guess, time your way out. But I'm not really looking to time SHD. So sitting at 10% of the portfolio, I'm fine with that because it also provides a bit of defensive aspect to the portfolio. More defensive action here. Vici makes up 9.49%. I recently sold a little bit this week to further fund some Amazon and SHG, and I got about like a 10% gain on that, so I'm not mad. I like the real estate exposure, bullish on Vegas, and it's kind of meant to be a staple in the portfolio, which I can't really. I'm more happy now with the last few weeks we've had that I have that in the portfolio. Water break. Next we have Amazon, 9.77% of the portfolio. I'm happy with the allocation considering how beat up I've been on it recently. So assuming that thing goes up, it should be around like 20% of the portfolio at some point. So I'm happy with that allocation's at. I am continuing to buy aggressively sub 175. Visa, probably my highest conviction holding. Geez, Amazon and Visa are probably tied. I love it. I'm very happy that I went heavy into it when I decided to, and it's 12% of the portfolio. It's just very consistent, and I like that aspect.
Yep.
Of
I mean,
course,
some people say MasterCard's where it's at. I mean, but
stop it. Ari is a fool for thinking that, even though he probably has a much better point than I do. I did see something about Visa's moat potentially being a little eroded. I don't know how much I buy into that, but
moat erosion and nav erosion, who give a flying fuck?
yeah. Well, then we have SHG, the GOAT, at 19% of the portfolio. So happy with that, and I'm down 7% on it, so or around 8% to be honest. But I think I think I'm gonna buy pretty aggressively right now, and then once it gets into the green, I'll just chill. I'm happy with the allocations at.
Yeah,
but there is a lot in SHG that I don't like, but I don't think it really will matter at the end of the day, just because of like Craig said, the SHD stand. Yeah, there's gonna be some stuff you don't want to own, but you're also getting exposure to the next big thing the next Google, the next Amazon, right?
maybe. Yeah, it could happen.
What holdings do you not like in the portfolio? What do you like? What do you think could be trimmed? What fact could be
yours?
SHD, obviously, probably you don't.
I mean, if you put me in charge of your account for a day, Microsoft's going away. It's probably going towards maybe split between like, I don't know, Amazon, and then beef up some of your smaller positions like Grab, which like if you have it at less than 1%, right? What are you gonna do? Have it double and get to 2%?
Ooh, I like the sound of that. I don't know what you're talking about.
Yeah. That's just kind of an idea. I might even consider just letting like Vici go and do the same, put it into some of the stronger growers. But I mean that's just maybe picking nits, but and yeah, probably I would probably
pull it back up. Just
consider the break even. I mean, I'm looking at it right now. I have it.
Oh, okay, I see. Okay.
Yeah. And I probably probably would just take SCHD off the table and maybe split it between like Amazon and SCHG, something like that.
Yeah.
Yeah. Bolster up. Like but I've become more of a fan of concentrating into things that I really like, more so than trying to be spread all over the place.
Yeah.
Because I find when I'm spread all over the place and then the thing suddenly I've got this thing that's like 4% of my portfolio going down and I don't know why. And like, I'm feeling the need to look into it when it's not we're talking about like a few $100, but I've got them all over the place. These little things hanging out. It's more annoyance than it's worth. Concentration
Yeah.
is something I'm starting to like a little bit more. Not like super like I don't want to be 60% in something, but I think having like maybe 9 or 10 things that I'm really focused on, and maybe 3 or 4 like kind of playing around type things like that micro cap that I'm in, but where it's like if it could 10x or it could just go nowhere, but it wouldn't make a big difference if it didn't go anywhere, but if it 10x'd, it would actually be a big deal. That could be kind of good.
Yeah. 13 holdings right now. Yeah, I could see myself trimming like 1 or 2 more.
Well, and
Yeah,
I guess with the ETFs, I see that as having like a little bit of everything, because SCHD and SCHG are each 100 things.
Yeah.
Yeah. I don't consider each of those things to be one thing. That's my apprehension there. But if you want to have one thing that's like a basically a tie the market type thing or match the market type thing, probably SCHG over SCHD, just because
for sure.
Your age, your time horizon, all that.
Yeah.
Yeah.
What are your thoughts on the weighting of like 25 or 30% in SHG, just so I get like that tiny bit of outperformance?
Yeah.
Then if it were like 10 and 10.
I wouldn't call it out performance necessarily. I think SCHG will probably correlate really heavily to the NASDAQ in the long run. Yeah. Because I bet if you looked at a lot, like what SCHG's top 3 or 5 holdings are, probably they're in the top 3 or 5 or close to it in the NASDAQ as well.
Yeah.
So yeah, I think, if you want to say, hey, I kind of want to more or less match some index, and you like Schwab's methodology for SCHG a little bit better than the NASDAQ 100, then I think that's a perfectly fine way to do that. I mean, it's also 100 companies, and they're also large growth, tech, etc., are very much represented there. And if you want to have that be your like kind of your foundation, or just your boglehead investment or whatever that you don't really have to think too much about, that's fine. And then be concentrated on the other stuff, right? No, don't have too many little things that are like your little 1% and 2% things. I think there's just maybe too many of those, or too many for my taste anyway, not necessarily for your taste.
Yeah, the 1 to 2%ers are currently. Hey, I only have 3 of them: TKO, BTI, and Grab.
Yeah, which are all which is why, like with what I was saying, with some of the ones I would get rid of, I would boost those, because those I think those are good. Those are good companies. Like, I mean, I don't know TKO the valuation since it's gone up so much, but I do think it's a very good business. Yeah. And it's one of your OG original picks. You're the only one I know that owns it. So.
Fuhat is also. I don't know if he's in it. He talks about it, but I don't know if Fuhat's in it. Yeah. The thing is, like, am I really gonna? Am I gonna sell SHD pretty much right now at a loss? And am I gonna put that money to average up into BTI at 20%, average up into TKO at 55%? Grab. Okay, I can make that argument. I think when the stars align, I'll do it probably. I think that would make sense when the stars align.
Well, it depends. I mean, I guess it depends on what you think Grab, BTI, and TKO are actually worth.
Okay, Grab, I'll admit, Grab is like right now pretty speculative. I understand the thesis, but it's not like I've done a crazy amount of due diligence.
It's not speculation. Amit says it's going to be $10 in 2027.
Sorry. Okay. I take that back. I'm currently making the trade. Give me a minute.
The Oracle has spoken.
Yeah, the Oracle has spoken.
Okay. Yeah. So I guess it's just one of those things. I don't think there's anything wrong. I wouldn't even consider that taking a loss on SCHD, because if the dividends have offset it, you would be breaking even, I think. Okay. But unless you're just dripping.
Yeah.
If you're dripping, then that's probably a real loss, huh?
I'm trying. Yeah, let me look.
But it's not even 1%, so who really cares?
Yeah, it's not. Jeez. it sucks like selling at a loss, but at the same time, assuming that you're buying stuff that you think is reasonably valued, it really shouldn't over time.
Yeah.
Yeah.
Yeah. I mean that's like
Geez.
a
Last week I was convinced to sell UNP and now it's SHD.
you got to search your own soul on that though.
I do.
And like really just think through like what your objective is and if this is the best thing to get you there.
Yeah. Is Grab going to get me hookers in the hotel room in 2026 in Vegas? I can't.
When it's $10 in 2027.
Oh, this is wow. Schwab buffoonery.
Yeah, so I think he's doing that to hide his losses again, or because Schwab doesn't margin call him as frequently. He's willing to pay more interest and like accelerate the collapse of his portfolio just to not get margin called quite as frequently.
Dan doesn't like the Disney. I'd assume if Dan's still in there, it's probably gonna say it's woke. I don't know, like
I mean, I see that argument as far as like an argument against their content or not liking their content. I like a lot of their content. I'm not really going to the movies a lot though. Like I'm not gonna go watch a live action remake or anything of Snow White or Lion King.
You're not taking the date to go see Snow White.
No, not at all. I will occasionally see like a Marvel thing, but I mean, I think that's just visual like stimulus. Basically, you're there for the action scenes and the eye candy, the cool CGI and stuff.
Yeah. I thought Deadpool was okay. Did you see that?
Deadpool and Wolverine was fun. Yeah. I didn't see it in theaters, but I did eventually watch it on Disney Plus, which profitable.
Yeah, I'm gonna pull up. All right, we're pulling up FinChat once again. Link in description. We appreciate everybody that uses it and used our link. We appreciate it very much. But we'll pull up some Disney financials just because a lot of people seem to be thinking they're actually like going to shit, which is far from the truth. So we'll pull up some operating income because we come for income here on the show. And look, like they've pretty much recovered to pre-pandemic levels. In 2018, that's when Endgame came out, peak like Disney. I don't know if I'd classify this as dying business. Another thing too that Beater brings up, I don't know if I really agree with this. International travel going down is a big bear thesis for Disney. I think there's enough Americans that are going to flock to the parks regardless. I don't know if, basic economics here.
So the parks, there's definitely like there's a consistent like base floor of people that they go there once or twice a year, every year, like clockwork, and they're not gonna stop it unless they're like sick and dying on their deathbed, basically. And even then, they'll still want somebody to wheel them into the park.
Yeah, and if there's not as many foreigners or international people going, would Disney maybe lower the price of going to the parks, or would the demand probably stay the same?
The people that go less often, that maybe they're only ever going to go once or twice in their whole life, they may postpone that one trip during a more like hard or uncertain economic. They might like, oh, I know we want to go to Disney next year, but like we'll wait and see where things are, make sure we don't lose our jobs or whatever. I could see there being like a temporary dip in park attendance at some point from a recession, but I don't think it would be forever because recessions aren't forever. So I'm not that worried about it from that perspective. It might affect like 1 or 2 years. Earnings. Like if it was a really bad recession, 2 years.
We'll pull up total revenue and we'll do parks and experiences. Let's see. And it makes up what percent is this? Like not even half of their total revenue, and streaming is obviously the big cash cow going forward. It's just it's a very consistent form of revenue that they have. And like any giant
Yeah, a lot of their revenue is consistent, but there is a point to be made that a lot of their revenue is from like the occasional park goer rather than the habitual park goer. So
and they have pricing power on the parks too, and people complain about it.
Yeah, the consistent goers will pay higher prices.
Yeah.
That's been demonstrated for sure.
Also, before we about like 10-15 minute warning, if anybody wants any last questions, comments, concerns, we'll do the Evolution Gaming. They reported this week, and our good friend Finfluential X, he made a very, very solid recap for the earnings. Revenue up 14%, adjusted EBITDA up 11%, profit up 16.2%, EBITDA margin is 68%. Dividend proposed was $2.80 a share. Buybacks 500 million. Would that be like Swedish dollar or
that's euro?
Oh, 500 euro in 2025.
500 million euro. Yeah. What's their market cap again?
Evolution Gaming's market cap. I'm pulling it up. I want to say 80 bill.
No,
not 80. 168 bill. Sec.
I don't think it's that high.
Wait. All right. I'm taking this back. I want to say 80 or like 7.
No, it's not that high.
I'm doing the translation right now, everybody. Slow Kid does translation.
So it's 171 billion Swedish kroner, which that's not dollars.
I'm translating it right now. That is 17 billion.
Okay. So yeah. So 500 million euro would be if it's 17, you said it's $17 billion or euro?
Euro.
Okay. So that's like 3% of the stock, basically. Yeah. I think something like that. Which that's a pretty good buyback. Buying back.
Come to the show and watch us do math out loud.
Hey,
watch borderline fail. I'm not failing.
I'm pretty good. I'm pretty good at doing math out loud. Thank you very much.
I was told you aren't very smart at all. Let's see. Top priorities in 2025 are market share expansion, which is crazy considering how much of a market share they already have. Global studio growth, game innovation, a deeper platform integration, protecting margins. While margins may come over short-term pressure from new compliance costs, the company expects continued top-line growth, around 60 to 68% adjusted EBITDA margin for forward year 2025. They're also saying new studio build-outs in Brazil, Philippines, shout out Grab, and New Jersey and Michigan. So Sopranos.
I go check that out in person. The one in the Philippines, not in New Jersey. New Jersey's the armpit of the universe. I won't go there.
What are you talking about? You wouldn't go to the Bada Bing?
Okay, I'd go to the Bada Bing.
That's
if it was real.
I think it actually is. I know you can get food there, and I think there's exotic dancers.
I would not get food at a strip club.
Oh, come on.
I've heard some stories, and it just weirds me out.
Just eating on your chips, watching some dance. Open, chew with your mouth open. Capital. Very shareholder friendly, debt free, compounding. Very, very shareholder friendly. Regulation has been a short-term drag in long-term moat. Asia remains a key growth market, and the CEO said that this will be a year focused on execution, expansion, leadership, and looks like a good year for Evolution. So I'm not complaining as a shareholder.
Yeah, I'm liking the buyback. I mean, they could theoretically buy back a little bit more, but I understand that they're throwing almost half their earnings at the dividend, so
we're getting that next quarter or next month.
Yep.
I'm looking forward to it.
It's gonna be
Seymour
nice.
Duck's
It's
gonna
gonna
be able to retire.
very nice.
Yeah.
So yeah, I think that plus the buyback plus like just how much growth there still is in the business. I think it's looking good. The only reason it's so cheap, I think, is because it's not a U.S. stock and it trades OTC in the U.S.
Mm-hmm.
So imagine how much it would go for if they got listed like on the NASDAQ or the New York Stock Exchange.
Yeah. Reading the comments right now that I missed out on. Fiscal is more into taking teenage Latin girls to the ice cream stand for a soft serve. That might be quote of the year potential.
That's
Not true.
That's fascinating.
Yeah.
To the creamy stand. All right, it's very interesting.
Health and Wealth decided to join us tonight. There we go. Khmer fam in the house. Yeah, are you planning to do anything this week with the portfolio?
No, I
never plan on it.
I just I don't plan on it. I wait and I see what happens, and then we things are developing, we'll just say, out there in the world. So we just gotta I like to just be patient and chill for the most part.
Well said.
Yeah. I'm hoping that I get some new some new information soon on MPW. That's the
what's the latest with them? It's kind of been quiet because they've been performing good.
Well, the short sellers, like who, they've kind of all disappeared. One of them deleted his Twitter.
Oh, Rob.
Yeah.
Okay.
Simone, yeah. Pairing still has his fruity Twitter, but
I haven't heard that name
talk
so
about
long.
MPW anymore.
Oh, that's great. Oh,
like they're just pretending never happened, where they promised it was going to go to zero and be bankrupt and everything. Because it looks like that's just not happening.
Yeah, it's like the Jeremy with Tattooed Chef. Just pretend it never happened.
Just pretend it never happened. Exactly.
It's in the docket to vote in Evolution next annual shareholder meeting. List in the U.S. Wow, that'd be a. How much does it cost for them to list? Is there any affiliated costs like with trading?
Well, I think they would have to change where they're would they have to change where they're headquartered? They might not have to do that. I don't know. I mean, I'm sure it costs something. I'm sure it's not like free. Everything has a cost because there's probably paperwork you have to file. You have to pay the lawyers to do it, I guess, probably. But it would be probably negligible compared to the value of the company, right?
Yeah, I just opened Twitter because I was trying to pull something up, and this is the first thing I see. Say his name, and he appears.
Oh, God, no. Yeah, I saw that the other day, and I was like, what is he doing? Can somebody just tell me, is he mentally ill? Nobody wants to see that.
This guy has kids. I think didn't finance guy say something stupid this week? I haven't been paying attention.
Does a week ever go by where he doesn't say something stupid?
I want to say it was. He showed like his bank account and there was like $8.59 in it.
Oh yeah. Like that. Because he puts it all into investing.
Yeah,
and every dollar has a mission before it even hits his account.
All right, everybody, we've passed the 1 hour marks. We'll give you guys a minute to once again ask any questions, comments, concerns. Ask them now. I don't know. That's what Andrew says too, but I'm not too convinced.
No, you guys literally don't understand. Like he does rage bait, right? He knows
Dividend do this too.
Like he knows that some of the things he says are gonna like make people respond because of the way he words it or like how condescending he is about it. But the real him does come out, and he's immensely insecure, and like he must have I don't know, like never gotten approval from his father, or got
Disciplined a
shoved in a
little too hard.
locker by somebody or something, because he just there are these things that just set him off, and then he goes absolutely he's a psycho. Like he offered the thing where he was offering $5,000 to come fly out and fight him and stuff. That wasn't a joke.
Yeah.
That wasn't rage bait. He was mad. He was like fuming because people were making fun of him. He cannot handle being the butt of the joke.
Yeah,
He just can't. He can dish it out, but he can't take it. So he can do the rage bait and he can be condescending and snarky. But if you make fun of him and he gets his feelings hurt, or you trip a trigger, like you touch on one of his insecurities, he goes absolutely bananas, and that is the real him. The mask slips off.
Yeah,
because he is
like
kind of
rage bait account can't even like do that. Like
I will say, he is kind of playing a character. He's cosplaying as George Camel from the Dave Ramsey company or whatever the fuck they call it.
The sidekick.
Yeah. Because like even if you look at his cartoon avatar and then look at a picture of George Camel, in fact, bring up a picture of the finance guy avatar and then bring up a picture of George Camel. George Kamel.
Oh yeah, I mean that's
and almost all the advice he gives is exactly like the Dave Ramsey, like that's bad.
Yeah, I'm gonna assume
You're
that like everybody knows the finance guy profile picture, but yeah, it's like
so that's George Camel.
The yellow, the suit, the yellow background.
Yeah, no, go to the finance guy Twitter and show his cartoon avatar.
I'll say, yeah, it's like, and then worst finance takes is like basically fourth partying it. Yeah, there we go.
Yeah, so yeah, that's who he's cosplaying as online, and yeah, the wife parody account that also makes him mad. By the way, he thinks I'm the person that's behind it.
Yeah.
I don't know if you guys know that. He thinks I'm doing that.
We do have a nice screenshot from our
and he's literally going around posting click on the media thing for his for finance guy.
Yeah. What is it? Finance guy wife, that's the account, right?
Yeah, but
finance guy
but
wife.
No, go to finance guy himself first.
What am I? This guy does all the reposts.
Yeah.
This guy's actually
he does screenshots, not reposts, because he doesn't want to give finance guy.
Oh yeah, that's yes. Don't engage with him. That's
by the way, the wife account messaged me and asked me if like I wanted him to stop doing it because finance guy was like coming after me about it, and I was like, just keep doing what you're doing.
All right, what am I looking at?
The media tab.
The what tab?
Media tab.
Media tab.
Yeah. Scroll down.
Oh yeah, here we go. Oh, he still has it up.
Yeah,
it's still. What day was this? March 25th. Oh yeah, I'm shocked he didn't block. You could sue him for a false information. I did take that picture too because only real ones know where it's from, and we used it for a
top secret.
Yeah.
Yeah. So yeah, he definitely thinks I'm the one behind the account.
I'm surprised he hasn't like gone to your or DM'd you on like. Has he DM'd you?
Finance guy or the wife account?
Finance guy.
No, finance guy has not DM'd me. The wife account did to see if like to be like, is he actually like doing something to you to where if this is a problem for me to keep doing this? And I was like, not yet, but he did try to like go after that one guy on like LinkedIn.
I've been attacked on LinkedIn before.
No, there was a guy. Well, there was a guy.
Oh, I remember that. Yeah, I remember. How would your work like that?
And he called the guy's work.
Yeah, yeah, he did. With Kadre too, right?
Yeah, he's such a fucking male Karen.
Yeah, like you got to be kind of a British cigarette smoker to be doing that, you know?
Yeah,
British American tobacco.
He's just he's just the worst kind of person. And he wonder that he does all this stuff, and then like, how come nobody likes me?
Well, the funniest thing is like his engagement sucks. Like he gets like it's like average of like 8 likes on a post, and like you can't. Elon is not paying that much. Dividend Dude is the master rage baiter who's in the chat tonight. I guarantee like a 150 a month max. bucks. That's Twitter. Twitter pays okay, but it's like you're not making a career off it.
There's no way that whatever money he's getting on there is worth the amount of like, I don't know, mental anguish he goes through from the people making fun of him, and like the amount of effort he's trying to put into like
this account gets more likes than he does. It's incredible.
The wife account does, yeah.
Yes, it's incredible. Then this is the $8.59. The available balance. It's nothing good. Owning physical gold is the best way. Yeah, it's like
gold's a great.
Oh my God, Jonathan Judas is in here.
Yeah,
what a treat.
So that's my finance guy rant anyway.
Yeah, I just don't. It's kind of like with Kamara. Like, it was fun maybe for a day or two when like they were down and you get to beat them up and like really mentally affect them. But it is what it is. You can't live to hate on people. You just gotta live, and if you get the opportunity to hate on people along the way, then take your advantage.
The lesson: be an opportunistic hater.
Yeah. Fortunately, we were hoping Dividend Dude could come on tonight, but he unfortunately couldn't. He was busy with obligations. Obviously, the fraternity parties on the East Coast of the United States have to be operated. So yeah,
true.
Let's see. Blake was in here. So yeah, thank you to everybody who showed up tonight once again. Shout out to Mike for becoming a channel member before the show. Enjoy your value. Thank you all for watching. Smash the like button, subscribe. We will see you next weekend. And do dividends, stocks, drugs, and cash flow is king. Oh yeah.